I wanted to do a short video showing you guys an update on the Federal Reserve's balance sheet after, for over a year now, they have been talking about quantitative tightening, or QT, which I think is a stupid name, and it's meant to obfuscate things. What it really means is balance sheet reduction. So the Janet Yellen Fed over a year ago was talking about reducing the balance sheet. This is a one-year chart from the St. Louis Federal Reserve website. I'll attach a link in the info section so you can take a look, and this updates the Federal Reserve's total balance sheet, all the assets. So the balance sheet had started to be reduced, and it's been accelerating. Although, as you can see here on this chart, and I put a red circle around this, when the dollar index got to around the 88 support levels, the Federal Reserve did slightly panic, at least temporarily. And obviously now the dollar index has had a pretty strong rally. The dollar index today, on Tuesday, May 8th, 2018, when I'm recording this short little video, the dollar index has already rallied past 93. So it's gone from 88 when the Fed was panicking that it was going to break the key 88 support levels and perhaps crash to 79 on the dollar index support levels, which means gold would have skyrocketed. Now the dollar index has moved to 93, which gives the Fed basically a green light, whereas if the dollar index had broken below 88 support levels, that would potentially have been a red light for the Federal Reserve to slow down or stop quantitative tightening. And so this is basically a green light that the Fed is going to take more chances to continue to reduce its balance sheet. As you can see in this chart, after the dollar index briefly touched 88 and then started to strongly rally again, the Federal Reserve then, after a short amount of time, less than about a month, the Federal Reserve started to reduce the balance sheet again. So the balance sheet in the last about year, since a little bit before June of 2017, is now $100 billion less, which in terms of a $4.5 trillion balance sheet, $100 billion is really not that much on a percentage basis, but the quantitative tightening is supposed to drastically increase in size come October. In October, the size of the balance sheet reduction, I really want to stop calling it QT, but that's what everyone's going to call it. So from now on, when you hear the talking heads or the central banker speak on TV, you know what that QT means, balance sheet reduction. And so starting in October, the QT is supposed to ramp up to $50 billion per month in balance sheet sales. So that's going to be on an annualized basis about, on an annualized basis about $600 billion in assets that the Federal Reserve supposedly wants to sell. So we'll have to see if they can sell that many assets before there's another global financial crisis. But, you know, in the whole scheme of things, that much, only 100 billion or so right now, is really not that much. But if they do start doing 50 billion per month, that is going to be somewhat significant going forward. Comment below if you think that'll eventually break something. I think at some point, the combination of interest rate hikes plus the balance sheet reduction by the Federal Reserve could eventually break something, either in credit markets in the real economy, in asset markets, or anywhere else in the real economy that maybe we didn't think of. Maybe it's corporate bonds, who knows. Okay, last couple charts I wanted to show you guys before this short little video is over. Put things in perspective here. So the Federal Reserve has not, at least according to this chart that they publicly released on the St. Louis Fed website showing their total assets. Now, we know about currency swaps, but they don't count those on their balance sheet. It's been the other central banks that have been doing the massive expansions of their balance sheets the last couple of years. Okay, this is a chart from the Bank of International Settlements showing how much debt and credit has been increasing since the 2008 financial crisis. It's a massive increase. So it shows 2008 there, and now 2008 was increasing, and then it just ramped up afterwards. So a debt crisis was solved with even more debt, even more credit. I saw this in the Sandstorm Gold annual report that came out earlier this year. It was interesting, so I screenshotted this. I hadn't shown other people this chart before. I think it's interesting. The last chart I wanted to show was in Danielle DiMartino Booth's new article that came out all over the internet on Friday. It was on Zero Hedge as well. And this is showing all the central bank publicly listed central bank balance sheet expansions. So she shows in there where the Federal Reserve quantitative easing ended, and look, the Federal Reserve is the green section at the bottom, and that's basically a flat balance sheet since the end of 2014, October 2014, but look at all the other balance sheet expansions from the European Central Bank, the People's Bank of China, the Bank of Japan, the Bank of England, and the Swiss National Bank, or SNB. So there's been a huge explosion. That's over $20 trillion on the chart. That's just the numbers that we know about. The People's Bank of China's one is actually larger. If you look on their publicly listed balance sheet, they count a 220 trillion RMB liability on their balance sheet. This is being more conservative, but that number, over 20 trillion, is already 45% of about 45% of annual global GDP on central bank balance sheets. So balance sheet reduction for all these central banks, whether it's the Federal Reserve, the European Central Bank, the Bank of Japan, the People's Bank of China, will not be easy. In fact, there's a lot of people out there that think they will only be able to do a little bit of balance sheet reduction before the next global financial crisis. So just putting everything into perspective here, yes, it seems that the Jerome Powell Fed does want to continue to do quantitative tightening. We'll have to see how much they get away with as they ramp up to the stated $50 billion per month number in balance sheet reduction on an annualized basis. $600 billion removal of the balance sheet is significant. I'm just not sure if they're going to be able to get to that number before the next global financial crisis. If the next global financial crisis is delayed a year, the Federal Reserve's balance sheet will be below $4 trillion. If the next global financial crisis is potentially delayed for 2 years, we'll have to see what the QT plan is after a year. But in theory, the Federal Reserve's balance sheet would be below $3 trillion then. I'm not sure we get there without the next global financial crisis happening in the next 2 years or so. We might be even less than 2 years at this point. So comment below in this video. Like I said, though, guys, I just wanted to do a short little update on the balance sheet of the Federal Reserve and quantitative tightening and explain some of the Fed speak, how it's really just balance sheet reduction, and also that it is in a downtrend, the Federal Reserve's balance sheet. But compared to the total number of assets, and I'm using air quotes on the balance sheet, the 100 billion or so, a little over 100 billion that has been sold is really not that much. But things will start to get dicey starting in October. And we'll have to see exactly how much, as the months proceed past October, how much of those asset sales actually occur if we're not already in the next global financial crisis. Please like this video. Share it with friends and family, and don't forget to subscribe to the Wall Street from Main Street YouTube channel if you have not already done so. We're closing in on the 20,000 YouTube channel subscriber milestone, despite YouTube censorship, and hopefully we'll be able to get to 30,000 or even 40,000 YouTube channel subscribers quickly if YouTube doesn't shut down the channel. If YouTube does shut down this channel, remember to also sign up for the Wall Street from Main Street email list that's on the wallstreetfrommainstreet.com website, and will tell you where the videos are going to be uploaded instead of YouTube. Also, if you really like the content and you decide that you want to give a one-time donation, you can go to the wallstreetfrommainstreet.com website where there's different options for you to do so. Or you can become a Patreon contributor. Thanks for listening, and I look forward to providing you guys with some of the best information, analysis, and financial education available out there for free or paid.